Yeah, I mean, you could hypothetically make it the most liquid trading venue on the planet. If we assume that more and more assets are going to move on chain too, you could trade a meme coin like Pepe next to a predictions market on who the mayor of New York is going to be, next to a share of Apple, next to Bitcoin, right? You could do that. I think, the line between traditional finance and crypto is going to keep blurring. And I think this is the direction we're heading. And I think a lot of legacy incumbents like Robinhood and Coinbase, they know this. Hypothetically, if we got these rails right, we could leapfrog.
Jackson, thanks a lot for joining me today.
Thanks for having me.
Let's start off with telling me what does Azura do?
It's an on-chain trading platform. So think of it like a traditional brokerage, but as opposed to using, say, traditional financial rails, it uses blockchain rails. That's the long story short. Yeah.
Yeah, I'm sure we'll dig into a lot of components of what that means, but perhaps how did you end up building this? Like what brought you to this, startups broadly and building this product?
Yeah, it's I guess a somewhat longer story. There's never like an aha moment, right? I don't know if those are actually real. But I was always into finance. I always loved finance, and digital assets always made a lot of sense. Grew up on the internet, played Flash games when I was like 2 or 3. Compulsively played video games. So I spent a lot of time on the internet, and I got into trading CSGO skins, which was sort of one of the first like digital economies. I think now it's at like a $4 or $5 billion market cap across all CSGO skins. And I started trading was maybe 100 million, much smaller. But I was aware of crypto for a while. Didn't take it super seriously. All the people I looked up to that were in traditional finance said it was BS. I just sort of never gave it the time of day. And then when I was in college, I started taking some more libertarian leaning economics courses and stuff. And, it was 2021, 2022, and you could not ignore crypto. It was obnoxiously loud, right? Like $500 million seed round for Bored Ape Yacht Club. And then, you had Luna Terra and like $18 billion of investor deposits get wiped. You have Three Arrows Capital, and then of course, FTX. And I started paying a lot more attention to it because A, you couldn't ignore it, and B, it's like how did this stuff even happen to begin with, right? Like, is this thing fundamentally flawed, or what's the story? And I looked at FTX, and one of the things that sort of caught my attention was FTX was not a DeFi scam or a crypto. You think of crypto as non-custodial and transparent and all these sorts of things, but FTX was just embezzlement. It was just embezzlement that happened to involve cryptocurrency. So, one of the things that sort of caught my attention with Sam was he lobbied really hard against DeFi. I was like, why might that be? And I look at him like, oh, well, if he was building a decentralized exchange, he wouldn't have been able to commit, the fraud he committed. So I started looking into, DeFi, because the assumption was, okay, well, if these old rails are so problematic, and you have things like, Bernie Madoff and his Ponzi scheme, or you have Three Arrows Capital, you have FTX, and maybe there's sort of some refuge here. And I looked into, all sorts of different protocols, traded around a bunch on chain. And, what I came to realize was these rails have really great qualities, but they're borderline impossible to use. They do not make any sense. You have things like gas and all these different network standards, and you have to use wallets to connect all these different protocols and so on and so forth. And the immediate intuition was, all right, let's try to fix this. So yeah, that's pretty much the story.
When you started, like, was it just you, your team, and like, how did it seem like a solvable problem, or you're just like, there's some, like, how did you think about approaching the problem broadly?
Yeah. At first, I didn't really know what I was doing at first. I took I took a leave of absence from college. I'm like, oh yeah, I'll go to the Bay. I'll see what I can cook up, if anything. And I assumed I'd be here for like 3 months. And then, I used to resell sneakers and sneaker bots in high school. And two of the guys I had known that were building sneaker bots, which, I guess for context, there used to be these limited release sneakers and clothing from these outlets like Supreme and Nike and so forth. And they build these tools that you could automate the checkout process, so to buy, a shoe in a second versus 30 seconds or a minute. And I, hit up two of these guys I knew from high school and said, hey, I have this idea. brought him on board. We raised a little bit of money from some angels, and the first 6 months, nothing got done. We didn't know what we were doing. We sort of looked around for different things, had this, we knew what the end state would look like. We didn't quite know how to get there. And then Telegram bots sort of came on my radar. And this was like I guess this would have been April of 23 when the first Telegram bots came out, or May of 23, somewhere around there. And, like they were like these CLIs for, so it was like a crypto wallet you could use via text-based, chat-based input on, the app Telegram. And these are the first pure applications in crypto that made a lot of money. In other words, they weren't protocols, they weren't blockchains, they were applications. And for the longest time, I spent the first several months reading a bunch, and there was this paper called the Fat Protocol Thesis. It was written in, I think, 2016 or 17 by a guy named Joel Monegro for Union Square Ventures. And the theory was that in crypto and specifically DeFi, value accrual would be flipped, relative to the traditional web. And as opposed to value accruing at the app layer, it would accrue at the infrastructure and protocol layer. Without going through the specifics, I just vehemently disagreed with it. I just thought it was wrong. I said, this doesn't make any sense. Yeah. I think protocols and infrastructure will become heavily commoditized. I don't know who made protocols like TCP and HTTP and so forth, but I suspect that the value that accrued to the teams that made them, or the companies, or whatever it ended up being, was nothing close to something like Facebook and Google, right? So I assume the same would happen for applications in crypto, and this was like the sort of first, like nugget of evidence I had was Telegram bots. And we saw those, and I thought, okay, this is a nice stepping stone, but the end state's probably a web application. Something looks a lot more similar to like, traditional fintech or a centralized exchange or, whatever. Let's try to build, what feels like a traditional financial application using these very new and primitive rails and see what happens. But yeah, that was a story. So I guess the aha moment was Telegram bots.
Yeah, that's interesting. I mean, I guess by 2023, there's all these, as it pertains to that thesis, there's all these different L1s and L2s like kind of competing for the same thing and behaving in the same way, and like some are winning and some don't.
Yeah.
But what comes to mind is it like, I think the first axis is like there's this tension wherein, yes, DeFi makes it impossible to do FTX. I don't know, but for the most part, right? Anyway. But the flip side is that it's like now you're in this like crazy world of like programmable money, which is very scary, and there's like hacks all the time and like smart contracts, and it's like can be like a differently adversarial thing to be programming on top of. And like as someone who's just coming from the outside, did that feel intimidating, or or you're just kind of like, I know what I want to build, we're just going to figure it out?
Yeah, I think it was somewhat intimidating. Like no matter how much time I will spend in crypto, I will only ever understand the one specific thing I'm doing, and maybe then some for some other things. It is a very complicated space. I will not pretend like I understand all of it, but I built up a lot of conviction and learned a lot about this very specific thing, and that gave me the sort of confidence I needed to go headfirst into DeFi. But yeah, no, it is. It is the Wild West, right? Like it still is, even with some more regulatory clarity in the from the Trump administration. It's still the Wild West, and that was very appealing to me. I think that once an industry has become legacy, and there's all these hierarchies, and it's regulated to hell, and all this stuff, it's impossible to I think it's nearly impossible to build a proper 0-to-1 company. Things like in traditional finance, all the edge in traditional finance, all the sort of great institutions of the last 100 years were built off the backs of some sort of new wave, right? 1960s, you get things like index funds, and you get Vanguard. 1980s, you get sort of like finance, your internet finance, software finance, and you get things like Citadel and all these different sorts of market makers. Early 2000s, you get finance on the internet. You get PayPal. 2010s, you get like finance on the internet, X crypto, and you get centralized exchanges like Coinbase. And I assume the next big thing would be Onchain. And obviously, like, there's some downsides, of course, to using such new rails, but nothing but upside to me, at least.
Yeah.
For now.
Well, I mean, I guess in part it's the chaos and fragmentation mean that there's still going to be opportunity, like because the variance is higher.
Yeah, absolutely.
And also in part, like it's the backdrop of like if you're going to make a case that that it's going to be the app layer, because like the fragmentation is like what leads to like the substrate being like kind of commoditized, like it like the liquidity can move around and you know, creates the opportunity to like unify things in a different way.
Yeah, no, the chaos lent to my conviction. It was like, well, you know, this stuff is almost unusable. I think at the time there were probably 100,000 users on chain, maybe 200,000. It's hard to say, but yeah, no, I looked at it from a very first principles perspective. I think it made a lot of sense to me. I think, you know, blockchains is a new technology standard for, you know, old assets or new, makes a lot of sense. And I think there's a lot of misconceptions, and especially the Valley seems like the Valley sort of made up its mind on crypto, yet understands very little of it. A lot of people I meet that are very anti-crypto will say they're anti-crypto, but not be able to elaborate as to why. They don't actually know why. They just know it's a scam or it's made up or whatever. And it's just wrong. Like one thing I heard was that crypto tokens are fundamentally worthless. I heard that once or many times. And you know, what I have to say to that is, well, a crypto token could represent anything you want. You know, it could represent a share of Apple. So, you know, why is it fundamentally worthless? This is just a technology standard, right? It's like saying websites are fundamentally worthless because, you know, for whatever reason. I remember there was this talk show in the 90s. I don't remember which it was. Bill Gates was on this, you know, some late night talk show. And he's telling the, you know, the host, yeah, there's this, you know, people put radio on the internet recently and you can read newspapers and all this cool stuff. And the guy goes, well, you know, couldn't I just go to a newsstand? Can I just turn on my car radio? Like, why do I need this stuff on the internet? And you hear the same, you know, arguments used against crypto. It's like, well, you know, why would I buy Apple on chain when I can buy it, you know, through Robinhood or some other brokerage? And, you know, I could spend the next 30 minutes explaining why, but it's the same story.
All right. And then, but I guess like at the same time, if you're going to be doing, like you're stepping into this relatively messy thing and building on top of it and trying to, you know, I think there's like these dual insights of like, something's valuable enough that people are jumping through the hoops that it currently takes to use DeFi, and, but it's still not good enough, right? Like it's kind of like cognitively dissonant because you're like, but like, how at the outset, like, how did you think about the scope of what to build and how to build and like how to get to like what you actually wanted out the other end?
Yeah. We sort of, I think a lot of the playbook was built off of like, I didn't see Amazon from the inside, or I just sort of hear the echoes of what supposedly happened. So, you know, it's the basis was, you know, Amazon started with books because there's more types of books than any other item on the planet or something or another like that. And we looked at spot tokens, right? Spot crypto tokens. And we're like, oh, there's more types of tokens than there are any other type of asset on the planet. So we, you know, immediate intuition was, okay, there's all these different DEXs, you know, decentralized exchanges across all these blockchains. Let's focus on the 4 or 5 most important ones, most important blockchains, and, you know, get the 3 most important DEXs across them and integrate all of these in a way where, you know, you don't have to use 3 or 4 different wallets. You don't have to go and visit 20 different sites. You don't have to go and bridge your money between all these blockchains. You can use all of it from a single application with the same sort of user experience you might have using, again, like a traditional financial application, where you don't know whether your order is going to the New York Stock Exchange or the NASDAQ or the, you know, the CME. You just know you know, putting money in and something's coming out. So that was where we started. It ended up being a much larger scope of things to do than we initially anticipated. It's there's a reason why no one's built this. It's hard. It's difficult. The rails are very new. There's a lot of problems with them. There's all these different technology standards. The tectonic plates keep shifting, like the ground hasn't settled. So, you know, we'll have times where we integrate some exchange. It takes us, you know, however much time, and then not even 2 weeks later, people just stop using it, right? Things like that. So the world of crypto moves very fast. The specific segment of users we've been targeting, who are these like pro on-chain native users, i.e., you know, not mom and pop retail, but people that already are willing to jump through the hoops but want to save time trading. You have a very high bar for and a very low tolerance for what they consider high quality, right? It has to be lightning fast. You can't have any issues around things like slippage, and you have to route to the right exchanges, and it's very demanding. You sort of mix together, okay, very primitive rails, very difficult to integrate, ground keeps shifting, users with a very high bar for what they consider acceptable. It's generally difficult, but it seems like we're onto something. Yeah.
But is it difficult in a way that's like a slog, or difficult in a way where you're like, we need fundamentally new technology to unify these things?
Both. I think that a lot of the culture that's formed in crypto is like a trader first perspective rather than a tech first. So a lot of builders see it as zero sum or even negative sum, right? Like when you trade and you make money on a trade, that means someone's losing money on the, other end of some trade. And I think it's bled into the builder culture as well. So a lot of, these products we've been competing with see it as very zero sum, and they'll do some not great things in order to sort of, get another 1,000 users or whatever it is. It's also a very small segment of users right now, still very niche, maybe 50 to 100,000. So yeah, it's a very small pie. No one's attempted to grow it. They're all fighting for the same pieces. And then on the tech side, yeah, it's, we had to build everything bespoke. There is no Stripe. There is no, it's sort of like how early internet companies had to have their own server racks. There's no AWS, right? Not literally, but you have to do a lot of the stuff homegrown. So we had to build, our own execution engine. We had to build our own data engine and ingest these, billions of rows of data in this blockchain like Solana that, sends millions and millions and millions of transactions a day that we have to, ingest and clean and spit out to users and store. And yeah, it's generally difficult.
Just even driving, so like an execution engine is like, most of those don't live cross venue.
Yeah, so there's these things called DEX aggregators, and they're sort of like pure engines. They're not like applications. And DEX aggregators live usually only on a specific blockchain. So none are chain agnostic. Some have multiple, I guess you call it like multiple instances, right, across different chains. But they're not, how do I put it? Like, it's not very cohesive. So if you were to say have an asset on Ethereum, which is, a blockchain, and you want to buy some asset on Solana, typically the way it goes, let's say, some arbitrary token, you go to a DEX aggregator and you have to swap that token for some other token that you have to then bridge. And then once you've bridged it, now you have to take the bridge token on the receiving chain and then swap that into another asset. And these are like 4 or 5 different steps. How to unify that into a single click. And that takes, you get what a DEX aggregator does, you get what a bridge aggregator does, you sort of tie them together, and then you got to worry about things like, we added, we're adding stuff like gas abstraction, where you can use, say, a non-gas token, which is any asset other than, say on Ethereum is the gas token. But what if you're using some stablecoin like USDC and you don't have any Ethereums? How do you use USDC to purchase an asset without needing underlying Ethereums? Things like that. So it just compounds in difficulty. The fragmentation is the like probably the most painful step. And then obviously there's stuff like, scanning across, say, a dozen exchanges and a dozen different versions of said exchange. So Uniswap has like a V2, a V1, a V3, and a V4. That's just one exchange on one blockchain, right?
And the same pair might live across.
Yeah. Say there's Pepe ETH.
Yeah.
And there's a Pepe USDC.
Yeah.
And then there's a Pepe USDT. And then there's, 5 other exchanges that offer the same 3 pairs across 4 different versions for each exchange. And that's just one blockchain. Right. So that's where the complexity, therein lies is.
And then so the user comes in with an intent that they want to make a trade, and you need to figure out like what's in their wallet. Where is that? What is the liquidity across a bunch of different venues? At like what price? And then like, what does it even cost to get to that venue over like however many hops?
Right. And then this is just a market order, mind you. And then there's things like limit orders and take profit and stop losses. So now you have to look at, okay, these are the like specific parameters the user set. Like I want to buy an asset if it falls by 20% within some specific time frame. And then, if you throw in cross-chain, it's like, okay, I have money on Ethereum. I want to buy something on Solana using these very specific parameters, look across these 50 exchanges, across these 500 pairs and find the best one. Maybe even split up my order across different exchanges if it lends to better execution. So yeah, it gets messy.
Is there a point of complexity where it like it's hard to not make it the user's problem, right? Like, because it's like, I imagine there's like some routes, like there's like the possible routes, but then like, some of them are just like pathologically bad in terms of like the fee to execution cost or something.
Right. So then you have to build guardrails, right? And we built all these guardrails where it's like, okay, if you execute this order, you're going to get 30% less of your money than you want to get, right? Or,
and you might even be, like with that many hops, like you have this compounding slippage problem.
Yeah.
I don't know. This feels like it just explodes the complexity almost immediately.
Yeah, no, it's a huge pain.
So how did you feel like what did it take to feel like you got your arms around it?
Well, it took a while to get a good team in place. That is the make or break, I think. And I think, there's this saying that all problems are people problems. That is true too, right? So how do you coordinate all these different people and have them work with one another? How do you, sort of give people things they're both excited on working on and that are necessary to do, right? Because there's a lot of really smart people in crypto that these venture firms sort of nerd snipe to work on these problems that no one's thinking about and get paid, globs of cash to just do some sort of like science project. And then I think also because the industry is so young, like there's some, I don't remember where this was posted from, but apparently there's less than 10,000 active developers in DeFi right now. Now, what percentage of those are competent? Let's say 1 in 3, right? Now, what percentage of those are so good they've already made all their money and they've retired? Probably 1 in 5, right? And then what percentage of those live in the United States and you can work with in person? Let's say 1 in 10, right? And it just keeps narrowing down. So very, very, very small and select talent pool. And then of course, they have to sort of culturally be aware of what's going on as well. I don't think like, I think like if you say bring on some engineer who's never used a wallet, doesn't care to use a wallet, doesn't care about crypto, doesn't work, right? So yeah, that was, I think, we got something in place that I'm pretty happy with. That's obviously lent to the conviction. I also think like a lot of the predictions I had 2 years ago have sort of come true. I remember we first started, app revenues were less than 5% of all revenues in DeFi. Now it's 60%. Right, and it's going to keep continuing. In fact, the last month, in the last 2 weeks in July and for June, the first time ever, crypto volumes grew across the board, but decreased for centralized exchanges and grew for Onchain, or DEXs rather. So yeah, and obviously, hearing from users and seeing results of a product, that helps too. So yeah, all those things compounded, I think.
Were there things I guess there's a tension in that, like, I think that the part of the reason was like people kind of assume this is the end state, but have been built of like, I don't know. The one thing is like there's been generations of underlying blockchains have gotten faster and cheaper. Another thing is things just been built like heavily grounded in the possible as opposed to the goal. So were there moments where you're like, maybe we should just deal with that trade-off? Like how do you run into the friction of building in the space while keeping the North Star? Does that make sense?
Yeah. There's trade-offs, right? Like, I think when we first started, there's this common problem that it's seen often in crypto. I'd imagine it's a lot of other places too, where, I guess the saying to contextualize it is, I don't remember who I heard this from, but if you talk to users too much, you end up with a commodity. If you don't talk to them at all, you end up with an art project. And we almost ended up with an art project for a second there, because you sort of, imagine this end state. We tried to, sort of build it, but as it turns out, if you build something that sort of makes 1 million people sort of whatever, versus 1,000 people, zealots, the 1,000 people that are zealots is a lot more, tenable to build a business on top of than 1 million people who sort of, shrug. So yeah, I think like, you're constantly balancing, like, am I building into a rabbit hole? Am I building into something that only 10,000 people ever use? Or am I building into something that 10,000 people can use today, but 1 million people could use tomorrow?
Especially in this case, because you're like, what's users? You're targeting new people to the ecosystem.
Yeah. It's hard to say. It's hard to say. I just sort of always assumed if we can build a product that out of the box is simple enough for anyone to use, but can sort of scale with you as complexity, as you want to, make the product more complex or more, tailored to whatever your needs are, or, you put in your 10,000 hours, that can hypothetically work. We'll see, but for now it's mostly pro on-chain traders. So we're just focusing on the 10,000 hours guys.
And like, what are the things that are the big unlocks that make it feel more like a centralized exchange?
Yeah, the ones we're looking at is, how do you completely remove any mention of networks or gas or crypto? How do you completely remove
just assets?
Just assets. So you have this giant US dollar denominated balance you can purchase everything with. We know how to do it. It's just a matter of actually doing it. It's difficult. But yeah, we know what to do. We know what to do. It's just a matter of, okay, let's make sure we do it in the right order. Let's not. If we rush to building it right now, I think it would just come with a plethora of issues. It wouldn't. It's hard to say, but my intuition says, we know what to do. We'll get around to it. We're sort of, we're making steps toward that. But it's eventually it's just going to be a financial application, right? Crypto's on the back end. Like, most people don't realize Polymarket is a DeFi application, but it is. I think there's a way to get there.
And there's this interplay both between, in terms of the abstraction layer over the chain interaction, but then also like that suddenly makes the custody problem messy.
Not necessarily. You can have a fully non-custodial product or self-custodial, whatever the term is you want to use, while still having a giant USD denominated balance. What we were looking at was, what if you could have a giant USD denominated balance? So some, like on Coinbase, right? You just have US dollars. There's no blockchains. There's no mention of blockchains. It's just assets in US dollars. What if we could have a giant USD balance? Gives you 4% APR, right? 5% APR, whatever the treasury rates are. You don't have to have a bridge. You don't have to, no gas. No need to know what protocol is. No need to know what token pairs are. No need to know what a blockchain is. And then you're able to on-ramp cash from a credit card or bank, as easy as you could on Robinhood or Coinbase. When we get there, I think that's the unlock. And of course, you could layer on all types of additional assets. Right? We could integrate Polymarket. Now you have predictions markets. We could integrate, perpetual futures exchanges. We could integrate off-chain liquidity. So stuff that, maybe liquidity from something like Binance or Bybit or some sort of market maker, or whatever it is. So you could hypothetically make it the most liquid trading venue on the planet. If we assume that more and more assets are going to move on chain too, you could trade a meme coin like Pepe next to a predictions market on who the mayor of New York is going to be, next to a share of Apple, next to Bitcoin, right? You could do that. I think, the line between traditional finance and crypto is going to keep blurring. And I think this is the direction we're heading. And I think a lot of legacy incumbents like Robinhood and Coinbase, they know this. And, hypothetically, if we got these rails right, we could leapfrog. We'll see, but.
Yeah. I guess it means more in the sense of like, historically self-custodial things have intentionally been very aggressively in your face about self-custodial, like it's your problem, custody is your problem. And so I feel like you've done a bunch of interesting things that make it still self-custodial while not feeling the burden.
Yeah, no browser extension, no signing, no private keys, just embedded in the app. Centralized exchanges are the most successful crypto applications by many orders of magnitude. So if we can sort of mimic what they do, but using these new rails, I imagine it could be quite valuable. Exist in every jurisdiction minus OFAC sanctioned states. Anyone can use it. Doesn't matter how old you are. Any asset in the world that is on a blockchain, I suspect more and more will move on the blockchains. I also suspect that our definition for asset will grow, right? Predictions markets are a prime example of this. Like these didn't exist a few years ago. It's this whole new asset class. I don't even know what you could, I guess it's a new type of derivative.
Yeah.
I don't know. And I think that trend's just going to continue, right? Yeah.
Have there been things that you've set out to implement you weren't sure were possible, or like you hit a wall and you weren't sure you were going to figure out?
Yeah, I think when we first started, everyone had told us don't build a data platform yourself. Use some third party data provider or whatever. As it turns out, they're not very good. Right? So we were building on Solana and we were using this third party data product. We're getting, token data and quotes for stuff like 5 seconds delayed. Well, unfortunately, Solana has 300 millisecond block time. So that's like, I don't know, 15 blocks that go by before you get a quote that's now, 15 blocks stale. So, we first launched the product to use all these external providers, lent to bad UX. It sort of proved the thesis, but then we had to go and build it ourselves. And we weren't like entirely certain because there's entire companies dedicated to being data providers. As it turns out, I just don't think they're very well run. So,
well, I mean, because the alternate hypothesis could be there's something very hard about building data at blockchain.
Yeah, it's hard, but we built it with 3 people. And these are companies of 100 people that have a not very good product. So, I don't know what's going on there, but I think like a lot of people that didn't really know how this stuff works were saying to us, yeah, well, if there's a company dedicated to building it, then you probably can't build it yourself. But as it turns out, you kind of can if you want.
Yeah.
Same with like aggregators. We don't use third-party aggregators. We rolled our own. Just because otherwise, if you're relying on a third-party provider for things, then whatever they say, their coverage of whatever is limited, or they don't offer support for a certain exchange. You're out there, you're at the mercy of them. So. Gives you a lot more flexibility. Lets you on more of the stack. Yeah.
And then like, how did you get a sense? Do you feel like you had a very good sensibility? Like, cause it's like, there's a little nuance to that. Like, how do you not waste all your time deciding between whether or not these people just aren't good enough, or there's something more fundamentally hard about this problem?
Yeah. I mean, at first we assumed I guess at first we were like, okay, like these are probably too hard for us to do. Let's integrate them and see how users react. And users are like, all right, this is slow. This isn't good enough. And I was like, okay, well, there's nothing else. So we probably got to build it ourselves. Yeah, there was not sure.
To deliver this functionality, someone has to build this.
Yeah.
It's either we figure out whether or not it's possible, or we kind of.
Yeah, we didn't really have a choice. Yeah. It was just users aren't happy. Let's fix it.
Yeah, that makes sense. Are you guys how big is your team these days? 14. Yeah. And mostly engineering? Yeah. Yeah. And how relevant are LLM based coding tools? Extremely. Everyone uses Claude Code or Cursor or ChatGPT in some. I think. I guess I don't really know what the future of software engineering looks like, or the future of work looks like, but like most things, if you don't adapt, then you will be eaten alive by some other product who has adapted, right? I think a lot of this probably happened with the internet and with software and with computers. We probably don't know the names of these companies, right? Because they're no longer around. But these companies that failed to adapt to the the new thing probably got beat out by a company that did. Yeah. Right. So I'd imagine, I don't know. I'm sure there's all these financial institutions that, for whatever reason, didn't use computers or the internet, and we don't hear about them now. And I think something similar will happen too with blockchains, where why is BlackRock so dead set on owning as many Bitcoins as possible? I think it's the same sort of story. But we use LLMs every day. Is it organic? The people on your team have just decided to use them, or is it mandated, or somewhere in the middle? Yeah, it was sort of mandated. We recently started looking at there were some of these videos people were. Have you seen the VO3 stuff around there's all kinds of things. There was a company that did a VO3 GTA style advertisement for, I don't remember what it was, but I think even on the growth and marketing side, this stuff is necessary. It's adapt or die, I assume.
coding, marketing, growth doesn't really matter. It should be try to be used everywhere.
Are you guys like, do you like, are there places in where you worry like a security code, smart contract code, or, you know, like?
Yeah, I have a friend working on this. He does, there's a lot of like these secure, you know, these auditing companies that go in and, you know, manually check your smart contracts or, you know, whatever it is, anything that's reading and writing to the blockchain. And he's trying to build agents around this stuff so it can automate the process. And I mean, I'll just sort of wait for them to figure it out, I guess. Yeah. Like it's not worth us trying to roll it ourselves.
Yeah.
Yeah.
How do you balance like trying out new things without disrupting existing workflows?
I think there's some companies that take it too far. It's like this concept of the one-man billion-dollar company. I don't know. I think it's like a pie in the sky right now. Or there's some crypto companies. There's this one thing in crypto that I always thought was funny where people are like, oh yeah, one day there's gonna be some agent. You just tell it to go make me money, and it's gonna go make me money.
Yeah.
That's absurd. Like I think like a lot of the fun, like the reason a lot of people trade is because it's fun. You know, people actually enjoy the manual process of trading. Even for like driving, right? It's not gonna be fully automated away. People are gonna want to drive their cars. But I think if it was disruptive, I don't think we're too vehement about you must use, you know, AI tooling every day. Everyone's sort of found their way to it on their own. I mean, it's somewhat mandated. It's like, you know, try to perform. If this helps, go for it.
Yeah.
You know?
Well, also just, I mean, selecting for people who want to get a lot done in the first place is kind of a backdrop of like,
it's self-selected, I guess. Yeah.
Cool. Yeah, and that's interesting. Well, the coding agents, the trading agent is kind of weird because like, I mean, like if that exists, where's their edge? If there's just trading against each other. But
That's the thing. I think the financial system is going to be one of the weirdest things with automated agents. I mean, most financial transactions today are, you know, automated to an extent, but there's always humans in the loop, right? The financial system was created in service of humans, right? It's a human-made system for, you know, human coordination. So I don't think there's ever going to be a point where it's completely automated away. I don't even know I can't even fathom what that looks like. But I think, you know, maybe more of it'll be automated, maybe it'll be better automated. I don't know, but I don't think the world of finance 50 years from now will just be, you know, some guy that prompts slightly better than the next and therefore he makes more money.
Yeah.
That doesn't really make any sense to me.
Yeah.
Maybe, you know, an assistant to help you, you know, due diligence a company or something, but yeah.
Well, it kind of, I mean, it like scales up the made upness of it, right? There's like, you know what I mean? Like, which is weird because it's like, on the one hand, there are these like very high utility things to all the financial primitives we've invented. On the other hand, some of the artifice gets away from itself, but at the same time, like serves a purpose. Like, you know, like HFT has some relationship to like liquidity on all of those venues. So
making markets more efficient.
Yeah, right? Yeah. But there is a as more behavior gets agentive and not specifically like enacted by a human. Like how, like does it sort of asymptote sort of closed loop, or it's kind of irrelevant to the exotic for
I don't really know. I don't know. Yeah, we have to always assume inefficiencies. We have to always assume that it won't ever be perfectly automated. I mean, there's like, I guess as an example, there's companies today that are still very analog. Right, the internet and software and computers have been around for a while. Still analog, a lot of analog stuff, right? People still do in-person work. So I don't think, I don't know how everything would be automated away. Maybe I'm closed-minded or not dreaming big enough. But.
Yeah, no, I agree. I mean, I think that for financial systems specifically, like it just doesn't make, like it's not a sensible end game. Like it might happen in a temporary state that's like bubble-esque, but like, and then there's just like broadly across all human domains, there's this, resistance to change is like pretty durably human, and so we'll see pockets of things that are not.
Valley always underestimates this, right?
Yeah,
it's always timelines are much shorter than they are, and expectations are much higher than they should be. Yeah. It just takes a while for things to propagate. But
because it's like well, I think you see the thing where it's like the future is here but not evenly distributed, and you're immediately like, well, why wouldn't it just start to distribute rapidly? But I guess it's like not intuitive.
Well, it takes a while to change. There's people still using mules for farming, right? So I don't know.
Yeah, I guess very intentionally. Cool. All right. Well, this has been very interesting. What should we look forward to from Azura?
We have a new version coming out very, very soon. Should be a lot of fun. I think it will be the fastest and most robust on-chain trading platform, where we're getting close to the inflection point where you don't realize it's crypto. We're not quite there yet.
Okay.
But almost.
Sweet. Well, there's an outside chance it'll be out by the time this actually is published, but
maybe
we'll see.
Yeah.
But otherwise, yeah, I am personally looking very much forward to that new version. So
should be fun. We've spent a lot of time.
Awesome. Well, thanks a lot of time. This is great.
Yeah, thanks for having me.